Hey there, fellow moneymakers. Welcome back to our Monday Market Kickoff. And if you're looking to make money in the markets and you want to sound like the smartest investor in the room, whether it's in the office or on your next Zoom call, well, I've got you covered. Here's your go-to market update so that you stay sharp, in control, and most importantly, in the driver's seat when it comes to your money. Now, last week, the markets wavered as businesses braced for the impact of Trump's tariffs and a ton of global politics that are in limbo. All three of our indexes ended the week lower, reflecting that uncertainty ahead of a lot of events happening this week. So, this week, the big numbers to watch. The Consumer Price Index, known as the CPI, drops on Wednesday. This is just a week before the Federal Reserve's next meeting to decide on interest rates. Now, the Fed remains focused on hitting its 2% inflation target, and it's not gotten there yet, but this CPI report could really influence their next move. And don't forget that on Friday marks the deadline for Congress to agree on a funding deal to avoid a government shutdown, and that just adds another layer of uncertainty to the markets. Now, let's talk about strategy. The best investors make their money during downturns, not during all-time highs. When the markets are volatile, even strong companies can get dragged down, not because they're failing, but because the broader market is in turmoil. And this is where the great opportunity lies. Many investors hesitate to buy when stocks drop. They really fear that downside. But a good business with strong fundamentals can still see its stock price tumble due to the overall market sentiment. The key is knowing the difference between business risk, which is a company in trouble, and market risk, which is temporary volatility. Timing the bottom is nearly impossible. Studies show that missing just a few days of the market's best performing days can really impact your long-term returns. So the bottom line here is to focus on opportunity and not fear. When the market dips, position yourself instead of waiting for that perfect entry that may never come. Now, this week, my trade of the week is TQQQ, which is now the largest leveraged ETF in the market. So what is TQQQ? It's a 3 times leveraged fund that tracks the NASDAQ 100, meaning that it moves 3 times as much as the index, both up and down. Its biggest holdings include Apple, Microsoft, and NVIDIA. Tech stocks really took a larger hit than the overall market, and TQQQ is down 10% in the last week. I believe we're hitting oversold levels, so I'm making a move. I'm going to go ahead and sell the April 11th $60 puts. That's going to net me a premium of $2.61 as of the point of this filming, and that will change by Monday. I'll collect $261 and change upfront on this contract. And then if TQQQ drops below $60 on April 11th, I'm obligated to buy it at that price. Now, I like this level, and if I get assigned, I'll happily own the stock. Last week, I sold Google puts at 165, and I'm already up about 35% on that position. I have about 3 weeks left, and if Google keeps climbing, I might take the profits at around 50% of profit and redeploy those funds into a new trade. The lesson here is that in uncertain markets, staying agile is key. You don't need huge wins. You need small, consistent gains that will add up. So instead of chasing home runs, think about compounding base hits over time. Remember, investing is a marathon, not a sprint. So our key takeaways this week are to keep an eye on that CPI data on Wednesday. It could really shake up the market. Separate business risk from market risk when you're looking at stocks, and don't let fear stop you from buying great companies at a discount. Take profits strategically and stay nimble in this volatile market. So that's it for this week. Stay smart, stay strategic, and stay in the game. And if you found this helpful, hit subscribe and drop a comment with your market moves this week. I'll see you next Monday.